Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
Welcome back, ladies and gentlemen, to the Family Banking Show. We're your hosts, Derek, Rob, and John. Gentlemen, how's it going this evening?
Good. How you doing?
Yeah, what's new with Derek right now?
What's new with Derek? Not much. Just got back from a retreat with a couple of guys from our church, so it was nice to get away and get some fresh air, spend some time outside. What'd you guys do?
Yeah, same. I had a church retreat last weekend. It truly could not have been a more perfect weekend, like weather-wise. It was like high 60s, breezy, like not a cloud in the sky. Yeah, it was great.
Yeah, it was just such a beautiful weekend up here, and even this week has been so nice. I think maybe next week the turn starts to happen.
Yeah, it's gonna get chilly.
Yeah, I was out on the deck today after work, just kind of working from the deck because it was so nice.
That's great. Well, guys, this week we're going to be talking about what it means if you are uninsurable or if you have an insurable interest in somebody else's life. If you got declined for life insurance, what do you do? And of course, this is continuing in our series of Becoming Your Own Banker by our Nelson Nash. We're coming towards the tail end of that book here. Just, I believe, one more episode to go. So, guys, tell us some stories of, when somebody applies for life insurance and they find out that they're uninsurable, they get declined from the insurance company. Tell us some of your stories of experiences of what that has been like. What are some reasons why, red flags, those sorts of stuff?
I'll start with a personal story in my own application.
Mm-hmm.
This is not a normal thing, by the way, but it did take my application took 5 months and to get a final decision on my policy. And there are several reasons for that, but one of the main reasons was, I'm a veteran. I left the Navy last summer, and almost all veterans are likely receiving the VA disability compensation. And, that comes in different scales and different percentages, but at its core, it's a disability payment, right? It's a payment for whatever disability you incurred during your time in active duty service. And that's a good and a bad thing. One, it's a tax-free payment, which, is a way that the government is saying thank you for your service, I suppose, and in any, hardship or disability that you incurred, especially for those, in combat and who lose legs and have some serious trauma that they've gone through. But then I'll talk about the bad thing because, for most people, they'd say, okay, cool, free money. That's great. You can enter into the civilian world with maybe a bit more strength, and not feel totally stretched. But for me, it took five months to get this application through because the VA is a government bureaucracy, and as we all know, such as the DMV and other bureaucracies, it takes forever to get any sort of documentation. And that's exactly what I was waiting on, is my VA medical records. And honestly, the whole time I was pretty sure they were just going to deny me. And I was just a little anxious, honestly, a little nervous that, man, like I'm so excited about IBC, but yet I'm not going to be able to get this policy in force. And thankfully, there are some ways to still get it in place. There's some, not the best rating by any means, but still able to start my infinite banking journey and kind of see that. And I still just have a sigh of relief knowing that it's in the past rather than something I'm still dealing with. And so for all you veterans, all you active duty or, after your service, even if you don't want a life insurance policy or you don't want anything to do with this, but still, I would highly recommend going to the VA and ordering your medical records because it does take, they say it takes 6 to 9 months on average. Thankfully, I was able to get some stuff with the local office, but man, it's a slow moving train over there. And that's a huge reason a lot of people either get disadvantaged ratings or substandard ratings on their policies, or even some people can get denied from their life insurance applications due to disability in any form, and VA is just one of the forms of disability compensation.
Yeah, I haven't worked yet with somebody who's been flat out denied, but I have clients that have had their ratings reduced due to lifestyle, or mainly lifestyle, to be honest. But the interesting thing is, maybe for our listeners, is that so like some companies, and actually in different insurance companies have different processes for underwriting. Some are faster than others. And so it kind of comes with the territory. Some are faster than others, or more, or have higher standards. Some are super high standards and some are very reasonable standards. It's all a little bit different. But when you get a different, so it's like, let's say super preferred standard, then there's, like preferred smoking or standard smoking. They're all a little bit different, but that's roughly the kind of the rating. Then there's table ratings that are below that. But essentially what that means is that for the same amount of money that your premium is, you get less death benefit for the same amount of dollars, the lower you go down on the rating. So you can still do infinite banking process if you're not a super preferred, but you just buy a little bit less death benefit for the same amount of dollars. Just for a little education for our listeners.
Yeah, another way of putting it is your cost of insurance is increased because of your health or whatever factor. Let's just talk a little bit about what some of those factors are. There are non-medical related factors, and then there are medical related factors. Let's go through some of what those non-medical ratings would be. Earlier, before we got on the call, we were talking about driving records. If you're a pilot or a student flyer, scuba divers, if you're into racing, motocross, climbing, there's a whole host of just extracurricular activities that in the eyes of a life insurance company would qualify you as potentially being higher risk. And so one of the things that you can do to ensure that you're not high risk is make sure your certifications are up to date. I'm thinking of scuba diving in particular. Maybe you go with a charter service, a professional service that sets you up with rented equipment rather than your own personal equipment, because they're required to check for the safety of their own equipment. Depending on how frequently, maybe you do some scuba diving. If it's just once a year at a family vacation, you're probably going to be okay. If you're doing it, once a week and you're diving down to 200 feet, that's probably going to cause some alarm for the insurance company. Or if they see that you're a wreck diver, meaning a boat gets shipwrecked and you want to go in and check it out, that would be a high risk activity. What are some other things maybe that you guys are considering as non-medical related issues that may affect somebody's insurability?
On that same vein, there's your occupation. Again, pointing back to military, lots of people have dangerous jobs in the military. It's funny, even with the recreational activities that you mentioned, one of my best friends, he's a explosive ordnance disposal officer, which means he diffuses bombs. That in and of itself is risky. He does that also through scuba diving. He does underwater mine diffusals. And also, by the way, in some of his past roles, he's had to do skydiving of sorts. So those special forces guys are super cool, and they do a bunch of really, high risk stuff. And the boring life insurance guys are going to say that is far too much risk. And he hasn't yet moved forward, but he would be someone that I'd be concerned if he's uninsurable in his current occupation. If he gets out, then the whole game changes there.
Yeah, one more thing related to military personnel, and then Rob, you can take the floor. if you have orders to deploy, that's generally seen as, something that they're going to want to at least look into, where you're deploying to, if you're deploying to Taiwan or Ukraine or, who knows where. But if you're just going to Alaska, you're probably okay for right now. But depending on your location of deployment and how long you're going to be deployed for, that may be a factor where they could just say, hey, we need to hold off until you're back stateside and you don't have any more orders or you're getting out of the military. Those would be good instances of potential reasons why you may be uninsurable for at least a period of time. It's maybe not set in stone for your entire life, but it could be just a period of time.
Yeah, that actually reminded me your conversation that if something like super important that we haven't brought up is that the life insurance is such a powerful product, financial tool, that it's the only thing you have to qualify for in the financial world. Like, it's so good, you have to qualify to get it. And that's another for people who say, life insurance is just a whatever. It's like, yeah, well, go ahead and try to get it. I mean, you have to qualify for it because it's a contract. If you hold up your end of the bargain, they have to hold up their end of the bargain. And so they don't just let anybody get life insurance. So just let that sink in for a minute. Like that tells you something right there.
Yeah, to explain further why that's a good thing for a policyholder, if my life insurance company is just giving these cheap premiums for large death benefits for, a group of 100 high risk, motocross racers who are prone to accidents and things are, a little less safe than, an accountant. They're more likely to have to pay out those death benefits much sooner. And so that puts the company at risk, that puts their financial stability. And that's where the underwriters and the actuaries really do a great service, for the company to give all the policyholders, reliability in the company that is insuring your own life or the life of others that policies that you own.
Yep.
Let's move on. Let's talk about what are some of those health issues that maybe our listeners wouldn't consider as something that would be alarming to a life insurance company. One thing that is an easy one for us to determine whether or not you're going to get a certain rating would be your weight.
Mm-hmm.
If you're obese and overweight, we can at least tell you where that spectrum is. What's the number? Maybe if you think, hey, if it means I can lose 10 pounds in the next 2 months and it lowers my cost of insurance, some people are willing to do that, put in that effort. What are some other health topics or issues that you guys have seen that maybe people wouldn't necessarily consider as, is this a make it or break it when it comes to qualifying for insurance?
One that surprised me, the main policy I have is I was super preferred. And then I applied for another whole life policy with a different company. And because my blood pressure was too high, and if you have any one, and basically this company has 5 categories. If any one of the 5 are out of range, then you're standard. Unless it's like really bad. But if anyone's you're healthy, but any one of those 5 is out of range, if your blood pressure was over 120, I think mine was 124 over something. Maybe it was 138 or something. But anyway, it was that I became a standard rating just because of that one thing. And the funny part is my wife's a nurse and she was taking my blood pressure. I was like, can't be right. And so she's like, this isn't right. And so she took my blood pressure for like every day for 3 weeks, and it was up like way in the healthy zone. So I don't know. I guess I had what they call white coat blood pressure, where your blood pressure goes up just because you're getting so that's kind of weird, but it happened to me.
Yeah.
Yeah, another medical thing that that can result in, not always, but can result in a mild substandard rating is mental health stuff. If you're diagnosed for depression, anxiety, and a lot of mental disorders, that's definitely not a deal breaker from the start. And I'll just say personal, side note is, if you are dealing with any of that, it is very important to get that treated, and not for the sake of life insurance or really anything else, but like, get the right help. All of all of the necessary services for that are really important to get, and deal with mental health. I think there's been a great improvement in our society to focus on that and see it as a sign of strength. But, that is still statistically a risk to a life insurance company for those with depression, anxiety. So that could result in a slightly lower rating, but definitely not a deal breaker.
Yeah,
What's another medical one, Rob, that you had recently that we were talking through?
Yeah, that was surprising. I guess so. All of our listeners, I'm sure, will be aware, like around the nation, the use of marijuana is becoming legal and normal and commonplace. And I have a couple very young clients, super healthy, but in each one of their exams, there was indication of marijuana use, and then they filled out like it was very small amount, over like 1/8 of a gram per week or something. I don't know. I guess that's not much, but it's like so small amount, but they both got rated as tobacco. It's just, and that just that rating from, they're super preferred. I mean, they are healthy, fit, young people. They'd be super preferred. That jumped their, at least on a term policy, it made it 4.5 times more expensive per year for the same term policy. So that really surprised me. And so it's just something to be aware of. It's just becoming such a commonplace thing and very accepted in normal people, smoke marijuana or edibles or whatever, gummies. That got to consider that. That will show up, and that will set you down to just a standard tobacco. If you chew on nicotine gum, if you have any kind of thing, like if you might not be a smoker, but you just like nicotine, that will make you a tobacco rating. So yeah, it's just things to be aware of.
Yeah, and Rob, you had said earlier before the call that that increase in term costs, or increase in premium for that term policy, obviously, as you said, was 4.5 times more, but it wasn't as significant in a whole life policy.
Right.
So even just switching the types of policies around, you may be able to lower that burden, that effect of getting that substandard rating.
Right. Yep. That surprised me, actually, the whole life policy, because the one client I was working on it was a combination of a term policy and a whole life policy. And it was not much different actually for the whole life policy, but the term policy was just off the charts more expensive.
Yeah. Guys, let's talk a little bit about insurable interest. What's it mean? Why is it important? What could somebody who is uninsurable, they've gone through the application and underwriting process, they've been declined for insurance, how can they still become their own banker by utilizing insurable interest? So John, why don't you take it first? Just explain what it means, and then we can dive in a little bit deeper.
Yeah, when I first discovered this concept, and I don't want to assume anybody knows everything about whole life, because I definitely didn't before discovering this concept. So you can, and probably should, after learning more, own multiple policies, and they don't have to be on you. So in this case, like Derek's saying, you get declined for whatever reason, you can still own and pay a policy and reap all the benefits of the cash value and all the banking benefits that we've talked about, but it's insured on someone else that you have what's called an insured interest. Generally, that means your immediate family, say it's your spouse, say it's your children. In this example in the book on page 82 and 83, I think it's a 50-year-old father and his 23-year-old daughter, and he's getting the policy on his 23-year-old daughter. That's certainly an option. And, if you're in a business capacity, you can get it on a partner in your business, right? You can get it on a key person in your business. So there are other options. And really, I find this fascinating. The only requirement is insurable interest at the time of application.
Right.
A couple of years goes by and there's no longer that insurable interest. Say you exited the business in that example, that policy is still in force. That person's still insured. If you still pay those premiums, you still own it. You can continue reaping the benefits of the cash value and all the banking benefits that come with it, even if you no longer have that insurable interest. I find that fascinating.
Yeah, I agree with that. That reminds me of a story of someone that they own an apartment building, and he kind of did a lease deal with a lot of the people in the building, and it was a contract, and then they became an insurable interest, and he got policies on everybody that did that deal with him. So when they get done with their leasing term and they go move away, he still has an active policy on that person, because for that period in time with that business and that contract, that they were insurable interests. And yeah, I find that very fascinating.
Yeah, just to explain maybe a little bit further, even though, let's say, person B is the insured, you as person A are the owner and the payer in this instance. Person B has no right to the cash value, has no right to any of the terms, even the death benefit if they're not the beneficiary. Well, obviously they can't be the beneficiary if they're the insured, but so yeah, even, just some creative ways to think about this. We've talked about churches and nonprofits owning life insurance, and this could be, let's just think of churches, for example, your elders or deacons, maybe even your church staff, or a high donor, somebody that has been donating large amounts of money to your church. You have an insurable interest in that individual to keep the operations of the church afloat, at least for a period of time. Another example would be potentially if you have in-home childcare. I think of some families that have hired nannies, and they've formed a formal LLC. That nanny is listed as an employee. You have an insurable interest in that nanny, that you could actually get a life insurance policy on those individuals, even though maybe they only work for you for 6 months or a year or 2 years. You can keep that policy around as long as you want, because you're the owner of the policy, so long as you continue to pay the premium that's scheduled. But yeah, just some really creative ways, as you guys have already said. Your immediate family members are a no-brainer. If you've got business partners, that's an easy one as well. Key employees, even. The key thing to remember here is the insured also has to agree to it. You've got to convince them. They've got to go through the medical underwriting, the paramedical exam, the application portion of that applies to the insured. So it's not like you can just get it on anybody and fill in the data for them. No, they've still got to sign the contract as well. They're still an involved party. But it's at least a way that you could become your own banker without having to be the insured on the contract. Another way of putting it is, instead of banking on yourself, you're going to be banking on others.
Mm-hmm.
And so you're just utilizing other people's lives as the vehicle in order to do this. And Nelson gives an example of that on page 82 of the book. If you'd like to learn more, you can certainly check that out. What other thoughts and ideas do you guys have that might be impactful for our listeners when it comes to this particular topic?
I'll just say two more. So just to add another example that we see often in the IBC community is private lending. If you are loaning from your pool of capital that's safe in your policy to someone else, say it's a hard money loan for a real estate flipper or something, you can get a policy if you have enough business going with this person on that person, because you're dependent on them repaying you. I thought that was recently, I just learned of someone doing that. That's just a really powerful way to
Smart.
protect your business and your capital, but also obviously build room to store capital.
Hmm.
And another thing I'll just say is just this short example on page 82 and 83 continues to point back to one of the primary tenets of infinite banking is to think long term, right? Maybe you can't get a policy on yourself, and in this case, he's getting a policy on his daughter. He's still taking care of his family and taking care of generations to come, right? In the example, he's even able to get everything that he put into the policy back tax-free, and also provide a substantial supplemental passive income, retirement income for his daughter, and then also provide this death benefit from his daughter to his daughter's beneficiaries, which is really powerful. And so thinking beyond yourself, thinking long-term, generationally, is just yet another example of how that can play in.
Yeah, good point. Then I'd say maybe another one of Nelson's tenets is imagination. So that's, just think about what insurable interests you might have in your life. Like that's such a good one. If you're hard money lending to somebody, as part of the agreement for that loan, they have to agree to get a policy on them. So that you're the owner, but it's on that person. I think that's super smart. So it's a great way. It's a great use of imagination.
All right, guys. Well, thank you very much for participating in this episode. If our listeners wanted to find out more about how to become their own bankers, you guys can reach out to us at thefamilybankingshow@gmail.com, and we'd love to sit down with you and discuss how it is that you can become your own banker. In this next episode, guys, we're going to be summarizing the book. This is really a great place to get some key takeaways from Nelson and this idea of becoming your own banker. So I would certainly encourage our listeners to keep an eye out for that episode when it drops. All right, guys. Thank you again, and we'll see you in the next episode.
See you guys.
Thanks.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.